This is a simple RSI strategy that's been profitable every year since 2008. And the best of all, it's 100% rule-based, no analysis, and in this video I will show you exactly how to trade with it. So this is the RSI indicator. Most people know RSI like this. Above 70, it's overbought and price should fall. Below 30, it's oversold and price should rise. So we are taught anyway. But let's test this with a very simple strategy. When price closes above RSI 70, we go short and we close the position when RSI falls to 60. And when price closes below RSI 30, we buy and we close the position when RSI rises to 40. It's very basic, but I think you will be surprised how well this works. Time of the recording of this video, the strategy has actually won 9 times in a row. Usually when you see a strategy explained, nobody talks about market, time frame or direction. It's often presented like some magical strategy you can use everywhere and just constantly make money. Then you try it yourself and you get confused because it's never as good as promised. Believe me, I've been there and I know how frustrating this can be. So now I will give you the exact market, time frame and direction to trade. So you will have no questions or doubts about what to do when trading this strategy. Let's start with the market. All markets behave differently and there is no strategy that works well everywhere. This strategy works on many markets, but works especially well in clear long-term trending markets, like the Nasdaq index. And personally, this is my favorite market to trade. You see, I've created and backtested hundreds of strategies, and a very clear pattern is that many strategies perform best on Nasdaq simply because of its volatility and clean price movements. So why make things hard? Maybe I'm just a little bit lazy. I like when things are simple. For time frame, let's use the 2-hour chart. I like the 2-hour because it gives clear signals, but still a fairly high number of trades. It's a good trade-off. You can go to lower time frames, but in most cases, the quality of the signals starts to drop. Smaller time frames usually have much more noise compared to something like the 2-hour, 4-hour or daily chart. And I'll show you what I mean by that in a minute because the difference is often bigger than people expect. Let's first test the short strategy. We short when RSI goes above 70 and we close the trade when RSI comes back down to 60. And this is not very good, so why am I showing you this? It's simply because I want to point out something very obvious, but something a lot of traders still ignore. And that is that you shouldn't fight the bigger trend. The Nasdaq rises over time, so if you keep trying to short it, you're constantly betting against the natural direction of the market. So instead, let's look at the long strategy. We buy when RSI goes below 30, and we close the position when RSI comes back to 40. And this is a lot better. Now we can see some very solid results. This backtest goes back to the year 2000, and during this time, the strategy has stayed profitable with drawdowns around 22%. At the same time, it's produced returns of more than 650%. What I personally care most about is not the best year, it's that the strategy is able to survive bad periods and still recover. The win rate is around 75%, which makes it much easier to trade in real life, simply because it's a bigger chance of winning than losing. I know you are taught to trade with big risk to rewards like 1 to 3 or 1 to 5 with lower win rates around 30%, but in most cases this is more of a theoretical concept because most traders can't trade with such a low win rate without losing their minds. And by the way, even though the win rate is high in this strategy, the risk to reward is almost at 1 to 1, which is quite impressive. So on paper, this already looks very solid. And by the way, here's how the strategy performs across different time frames. The higher time frames, 2-hour, 4-hour, and daily, they all hold up well. But on lower time frames, this strategy is simply not tradable. So where is the stop loss? This is probably the most common question I get about this strategy, and the answer is, with this type of mean reversion strategy, stop losses often make the results worse. It sounds counterintuitive, and you probably always heard that you should use a stop loss, but mean reversion works because we believe price is stretched and should snap back to the mean. So the further price stretches, the stronger the entry signal actually becomes. If you stop out too early, you often kill the edge. That said, you're absolutely free to use a stop loss, and the strategy still works well with one. By the way, you can download this exact strategy for free from the link below. You can then add it to your TradingView chart and use it the same way I do here. I've also added optional stop loss and take profit settings, so you can test it yourself and see what works best for you. Now, let's add commissions, and I know this is a boring thing to talk about, but it's also a very important part of profitable trading. Most traders skip this, and very often those are the same traders who stay unprofitable year after year. Here's a strategy on the Australian dollar against the Canadian dollar on the 50-minute chart. It looks pretty good, but when we add realistic commission and slippers, the strategy just falls apart. So now let's add realistic commissions and slippers to our RSI strategy. We can see some impact, but not much, and that's simply because we're trading a market with generally low trading costs on a higher time frame like the 2-hour, where the average trade is large compared to the trading costs. And this is a big part of why this type of strategy holds up much better in real trading. So now, should you just sit and stare at the RSI all day waiting for the next signal? No, of course not. With this type of strategy, you simply set alerts and then you walk away. This is how you set an alert on TradingView. When you have the strategy on your chart, you just go up here, click these 3 dots, press add alert, and choose to get notified on your phone the next time a signal appears. Then when the alert comes, you open your chart and you place the trade and you are done. Trading this way helps you avoid some of the most common trading problems like overtrading, overthinking, and not following your plan. Instead, you get more time to do things that matter more in your life than staring at a screen, and you will most likely also get better results because you're trading a strategy with positive expectancy and you're not constantly destroying it with emotional decisions. So with alerts, you can live your life and still trade in a structured, calm, and professional way. If you found this video valuable, feel free to subscribe to this channel. See you in the next one.